How to measure national income? There are three methods of measuring national income. Number one is the expenditure method, and that means what? That means you measure the national income by taking into account all the expenditures which are taking place in an economy, and that is first method of measuring the national income. The second method is the that is known as income method. So in case of income method, what you're doing, you are aggregating income earned by everyone in the country, and that is your income method. And third is the value added method. So these are the three methods for the purpose of arriving at or measuring national income of a country. Let us look at and understand as to how to compute income, national income, using the expenditure method. So in case of expenditure method, as the name suggests, how will you determine the national income? You will determine the national income by taking into account all the expenditures. Meaning what? Meaning number one, consumption expenditure. And what is the meaning of consumption expenditure? The meaning of consumption expenditure is non-durable consumer goods with a lifespan of less than 3 years. So non-durable consumer goods, and how do you define the non-durable consumer goods? You define the non-durable consumer goods. You define them as the goods which have a lifespan of less than 3 years, and those expenses are known as consumption expenditure. Then you have capital goods expenditure, and which is how do you define the capital goods expenditure? Durable consumer goods having a lifespan of 3 or more years, and that is your durable consumer goods. That means, as a country, the first expenditure that we incur is consumption of non-durable consumer goods, and non-durable consumer goods are defined as those goods whose lifespan is less than 3 years. And then you have capital consumer goods. And how do you define the capital goods? Capital goods you define as durable consumer goods having a lifespan of 3 years or more, and that is the second expenditure. So consumption expenditure, capital expenditure. Third is the government expenditure. So government expenditure, that means expenditures incurred by the state or local or the federal government, valued at cost, and that is abbreviated as G. And the fourth is net exports. So net exports would mean total exports and minus the total imports. So that gives you the net exports. So when you total all these four components together, it gives you your GDP, or it gives you the national income. So C is the consumption expenditure, I is the capital goods expenditure, G is your government expenditure, and X is net exports. X is net exports. So all these four components put together is the method of determining GDP or national income using the expenditure method. Now, besides using the expenditure method, we can also determine the national income based on the income method. And let us now understand how do we determine the income based on the income method.